What is up, charting nerds? Where you been? How you been? Well, I guess it's more where have I been? I've been obviously on a vacation for the last week. You guys probably know that, but we're back, ladies and gentlemen. It's a brand new year, 2024. We made it. We made it to 2024. One more year closer to being that 30 years of age. We'll see if we can get there in a much better state than where we were last year. Basically, talking about growing from last year into this year, and we're gonna start off the year great. This year started off great. Was very patient off the open. We'll talk about my trades more in depth, but very, very patient off the open today. Traded, executed so perfectly. Had a losing stock too, but even that losing stock, the way I managed it, the thought process behind the trades of that losing stock, everything just felt so clean today. Just taking that vacation, spending some time off the market, thinking about what I want to do for this year, thinking about where my goals are, what my plans are, just igniting a whole new fire in me, and that fire just being translated into today's trading felt good. Now the plan is to stay consistent, always keep growing, and keep looking for ways to improve our trading systems, just get better 1%. Just get better 1% just from last day, from last month, from last year, and we'll see if we can compound that growth. I see a couple people in the chat already. Michael Storm saying a happy new year. Yes, obviously happy new year to everybody. Merry Christmas. Hopefully your holidays were very, very jolly, full with your family, friends, whatever you did, wherever you went, and maybe Santa gave you tons of gifts too, obviously. For those of you who don't know, Santa is real. Santa is real, and the market proved that. We had a beautiful Santa Claus rally all year 2023. Basically 2024 off to a little bit of a rough start here. We know Apple's news came out a little bit weak. Apple hurting the market with their catalyst. Tesla delivery numbers coming out also. So lots of activity on the market to start off the year. Lots of trading opportunities. Now the question is, how do we capitalize on it? How do we trade for tomorrow? How do we set up for tomorrow? And that will be obviously the second part of the stream after we finish talking about my trades on the day today. Thankfully, only 3 stocks to talk about. So why don't we start off the day with that one? Let me just quickly, we can just do this full screen mode. So, my first few trades on the day today started off with keeping my eye out on Riot, Mara, and Coinbase. I had no clue that Coinbase would actually pop up right into that 187 area, and that area was something that I was thinking would be a target for the long on Coinbase after the way Bitcoin moved last night. So Bitcoin actually made a monster pump up last night itself, it was pretty surprising because Coinbase, Mara, Riot, all of these other stocks actually plummeted to the downside and sold off. So looking at the sell-off on Coinbase, on Mara, on Riot, I guess they were all selling off on news that Bitcoin miners were selling off their positions, so they sold off too. But with the Bitcoin pump into the overnight session, I was looking for the long, but Coinbase already was showing you what the direction where these stocks were probably heading into, and that was to the downside. And the way you could see that was, rejecting that 187.50 area perfectly one more time into pre-market, never really coming back to that area all through pre-market. Let me just expand that chart for us, and then failing to hold that 175 area, which I thought would be the area to get into long, but then failing to hold above 175 area, and then even 171 area, which was around, I think, Friday's low, I think Friday's low, end of 2023's low, which was 171 area, not able to hold 171, and flushing below that off the open. That was pretty obvious of an indication right there to stay away from the long. But at this moment, when the stock, this is the first 10 minutes off the open, each bar is 5 minutes. For the first 10 minutes, the stock is actually holding 171, right? For the first 10 minutes, we're actually holding 171, looking to pop up. So on that little indication, I'm like, I'll probably try for a long over here on Riot. I get into a long into Riot over 1650 area. That happened to be like like what my game plan was too. If you guys are subscribed to my Patreon, you'll see that my watch list sent out last night talked about how I'll be looking for the 1650 area to come into play. So I tried some longs on some pops, get into some longs, scalp some out when Coinbase was looking weak, or even Riot was looking weak, but then get back into the longs later on, and then I just set a stop, and this is when Coinbase breaks 171. At that point, I just start punching out of my position a little bit more, and then I just get out of the trade completely on Riot. I say, you know what, this is probably not a long today, because Coinbase does not want to hold any key level that I would like Coinbase to hold for the cryptocurrency based stocks to go up. So ended up staying away from this trade. At that point, honestly, I should have probably just looked for a short into Coinbase on the break of 171, but that happened so quickly that I wasn't able to get into that short. It did give you some pops to get back into that short, into that 170 171 area if you wanted to, but I figured, I'm having a monster day over here on Apple. Why don't I just focus on Apple? That ended up being the right decision. So how did I trade Apple today? Apple, coming out with a negative catalyst, coming out with the downgrade. A lot of people actually moving away from Apple to Android. I'm seeing that personally in my friend circle. A lot of my friends have actually walked away from Apple. They used to have Apple products every single time, but a lot of them have moved away from Apple and are now going into Android and other phones. And Apple already kind of had like production issues a little bit, so that kind of coming into struggle a little bit. So Apple, obviously, with that downgrade based on possible lower sales for the coming quarter report, bringing the whole market down with it. So on any pops, I was ready to look for that short. Off the open, the stock actually flushes to the downside, but then pops right back into what looked like that 188 open area. It did pop above 188, looked like it was getting ready to just continue go up, but then failing to take out that 188.60s, 188.50s was a clear indication for me to start building into a short. So I started building into my first little position there with a stop above 188.60s. Right above this consolidation area. That stop never really comes into play. It starts pushing lower. So I take the 187.50 breakout. Then I take the low a day, which was 187 breakout. Start taking some profits of the shares that I had up here. Then start scalping some of the other shares that I start taking into these areas, right into this 186 consolidation area. Now I was thinking, this looks like a little bit of a bear flag right here. As you guys can see, I have this little what's it called, a short position calculator kind of set up over here for myself on TradingView. I have that screenshot for myself. So this over here on the 5-minute chart looking like a little bit of a bear flag. We dropped down, we consolidated. So if we do take out this 186, which was exactly the low of this area, there could be a bigger move to the downside on Apple. At least that was my thinking behind it, my rationale behind it. It doesn't actually end up breaking it. Instead, it pops up right into the 9 SMA, and then right around at the 9 SMA, right around at the VWAP area, it starts showing more rejection, not able to get above VWAP. So that's when on every single pop and failed to take out that 9 bar, failed to take out the VWAP area, or even push to VWAP area, I'm taking into the position, scalping some outs, and then holding for a bigger move down. At the same time, I'm also adding to the position on the break of that 186, because that was the bear flag trade that I wanted. So it does break that 186, bear flag trade triggered. I'm into some positions. Now I'm getting out of the size that I had up here, and now I'm just managing the size that I started at that bear flag. Now it's a completely different trade. We're now looking at the bear flag position, and the basic idea for that is you want to scalp this trade the right for the amount of risk you're giving it. So for the amount of risk I'm giving it was right around this area, not really all the way back to VWAP. So in that case, it was about a 1:1 trade, and then the stock not really being able to get to 185, 185.20, struggling to really take out below 185.20. Here's a 5-minute chart where every time we drop down, it wicks right back up to the north side. That figured, maybe the momentum is done for now. The opening momentum is done. Might have to look for the continuation momentum later on in the day if there is one. But for now, the scalp trade has been offered. I'm going to take it. I'm going to run a quick little 1 hour profit on that one. Continuing to the next trade over here. comes later on in the day. But before, oh yeah, we'll just talk about this. So later on in the day, like I said, the continuation trade on Apple, I feel like I traded this one very, very poorly because of how patient I was with my entry. So I waited for the stock to pop up above VWAP, consolidate a little bit above VWAP, and then start showing me a little bit of weakness. So it did do that. It popped back above 187, hit the high of like what, 187.35. That's that high right there, 187.35. Came back below 187, so I'm taking some shares, fills. Didn't really scalp any on the move down over here, but when it popped back up, had a blind order to take some more shares with the same stop above 187.30 because I didn't really have enough size over here. So figure I'll now be able to scalp some out on the next move down. I do that, add some on the breakout of that range. But I take some profits over here because I chickened myself out. The QQQ was going a little bit higher. The SPY was going higher. This 186 area was also the previous low over here on Apple. It is a good chance that that could hold again. Instead of participating, I anticipated and I took some profits. Obviously, can't be mad about taking profits when money was made, but I just feel like I left a lot of money on the table. If I had taken proper reasons to take profits, there were a lot of reasons to hold this position much longer. Pretty much all of that size much longer. Where I took some profits should have been probably the first exit should have been somewhere over here. Second exit could have been at low at day. And then if you look at what Apple actually goes to later on in the day, Apple pretty much goes to 184s. And our short was, what was our short again, guys? It was at 187. And we pretty much miss out a beautiful move all the way down to 184 over here. Oh, wow. Yeah, 183, 180. What's the low today on Apple? 183.89. And we were short right here, right? So when the trade's actually working for me, I chickened myself out into the previous low where it held. Instead of waiting to see if it would hold, I kind of just punch. That was a little bit of a mistake over there. But look how bigger of a move. That was basically the main move of the short today. That was a bigger move than this move that came out. And the stock ended up playing, I think, a 2 ATR move on the day. So monster short opportunity on Apple. It pretty much moved all the way back to, I wonder what this anchor VWAP comes from. Not sure why it comes from there. We can pretty much get rid of that one. That one's useless. But you get the idea. Monster trade on Apple today, and I'm happy that I traded it to the best of my ability. But you know, could have traded it way better later on. First exit should have been here off of that short somewhere here, and then we could have punched out a little bit here, punched out the most around here at 184.50s when it came back out, and that would have been big R wins. But obviously that was the end for me on Apple. The last but not least trade was pointed out by my manager. You know, this was a perfect bear flag trade again. Perfect bear flag trade. Nvidia consolidated a little bit right in front of 482. The market was already flushing. Apple was flushing. Market going to the ground. You know, so why not look for a quick little scalp on a break of 482? If 482 breaks, I think 480 is very plausible, right? I'm not saying it's guaranteed. I'm saying it's plausible. And if that's the case, the risk on this stock over here is basically $1. I'm taking the 482 break. I could even cut the risk down from $1 to 50 cents, put it down at 482.60s or 482.50s or something like that, and cut my risk down. But technically my risk was $1. In that case, you know, it's a very quick and simple scalp trade. A bear flag, you punch your entry, you get out your 50% of your trade or a little bit more than 50% of your trade on 1R. And I do that at 1R right at 481, a little bit below 481 because I'm greedy. But right at 481, take out 1R. Your entry is 482, your exit 481. And then you hold for the dream, which I don't really hold for the dream. You know, I figured my job is to trade the trade. I'm not here to manage a portfolio. I'm not here to manage a bunch of stocks and be right on all of them. My job is to day trade, scalp the profits, make the money, and take the money, not give it back. So I did it, took the money, took the profits, ran away from the market. Very, very good day for myself, and hoping that we can continue with this trade plan, with this discipline, with this, everything that we had on display today for ourselves. All right. Let's go back to the chat over here, see what the chat's talking about. Let me just quickly turn off the transition because that's going to be pretty annoying. Bang. I'm glad you're doing well, my brother. Wish we could share this moon rock I got with another one and chill. Yo, I'm down. But yeah, probably can't do that. I don't know what state you're from. Can you, as you use them GP over them free apps? What are you talking about? Can you, as you use them GP over them free apps you use, and why? Mainly why, etc. You're the best. That's the shit, bro. I don't know what you're talking about. GP? What's GP? Prad, could you share your thoughts on AMD and Nvidia? They are on my watch list, so you will probably get a chance to hear what I think about AMD and Nvidia pretty late into the stream a little bit, because more important stocks are at the top of the watch list. More important stocks, at least according to me. Oh man, my throat is so itchy. I need like a Ricola or something. My throat's pretty damn itchy. Let me show you guys what the watch list looks like today. Please don't glitch out, watch list. It's gonna glitch out. I knew it. Damn it. Please don't glitch out. Let me show you what's on the watch list today. There you go. We are also changing up our watch list a little bit. Before, we used to have a shit ton of stocks. We used to look at, 70 stocks and be like, okay, we're going to run through them and find all the trades, and then just get our mind all cluttered with nonsense and not really trade a single one of them properly and have a million stocks traded. But at least that way it helped us hone in our system, see what we want to see what we will not want to see, and so on. And now we're going to cut down. My dogs are going crazy downstairs. Hopefully you guys don't hear them. But now what we're going to see is less quantity and more quality. We're going to be pinpointing the right stocks, especially also because it's not earnings season. So we have to be very picky and choosy with what stocks we're trading. Are they really in play? Are they not in play? Is there a reason to be trading them? So Apple, obviously, with the news behind it today, there was a reason to trade it. These dogs are going crazy. We're dog sitting at the moment, so one of the dogs goes crazy, and it makes my dog go crazy too. So they just start going off in a bark contest, and they don't stop once they start going off. Anyways, you're not here to talk about my dogs. We're here to talk about the market. Go over the free apps you use. Sorry, Fat Thumb did. The free apps, I don't really have any free apps in terms of trading. I don't really have any free apps. I mean, TradingView is pretty much free, but if you properly want to use TradingView, you want to at least pay for I think the middle tier package. If you can't afford the middle tier package, maybe the basic tier package at the very least. TradingView is one of the best charting softwares I've seen out there, hands down. Trade Ideas is another software that I use. 100% not free, costs money. And Trade Sync is another one that I use. It's my journal tracking software, also not free, but there is a free trial on there that you can sign up for 7 days, if that's what you're talking about in terms of free apps for trading. But yeah, no, there is no such thing as free, my friend. Free does not exist. Freemium does not exist unless we're talking about video games. Some games are free. Coming back to the market, however, so I was, now we want to see, after the way Riot moved today, what kind of plans can we set up for, what kind of trade ideas can we look for on all of these stocks, Riot, Coinbase, Mara, and how does Bitcoin set up for going into tomorrow is also a pretty good thing to take a look at. So let's go into the daily chart here. Here's Bitcoin. So there was yesterday's move that we were talking about, the overnight / yesterday's move. Here's today's move that's starting a little bit bullish, obviously, right now, up 0.5%. Looking to see what happens at that. Wow, my line just came pretty much perfectly at that line. 45 850, 45 900 areas most likely comes back into play overnight / tomorrow. We'll see how that ends up playing out on Bitcoin. Bitcoin pretty much getting ready to look like it wants to blast off to 50,000 or something very soon. That would be great. That would be fun to see what happens if Bitcoin can do that. And if Bitcoin does do that, then you want to see what happens on stocks such as Coinbase, Mara, and Riot. Coinbase with a monster sell-off today. I thought Coinbase would easily stay above 171. That was my plan on my watch list last night. I was getting ready to, go long on any hold of 171. This probably would have taken me long and then stopped me out, at which point I would have stopped looking at this trade completely. But I'm glad that I tried it on Riot instead. It was way easier to manage my risk on that position, and this move actually kept me away from trying more longs on Riot or on the stock itself. Real quickly, at a quick glance, I like how I nailed that stock level right there. Looks like around 155, 155.92 / 156 area. So I'm gonna zoom out on the daily chart, see where that 156 156 area comes from. I guess it comes from all the way back here. Pretty old level on Coinbase, which kind of came into play a little bit over here. You see how we got a double top and a little bit of a bottom after the double top breaks out, but now coming right back into that area and holding that. This also happens to be the 20 period SMA on the daily chart. The 20 period SMA currently at also 156. So looking to see if this overall trend that Coinbase has been showing so far, you want to see the stock at least hold up at the 20 period SMA and not really pull back all the way to the 100 period EMA or the 50 period EMA. The white line should be the 50 period EMA, and the teal one is the 100 period EMA. So you don't want to be seeing the stock all the way back here. Also, I'm noticing that the earnings anchored VWAP is actually all the way back to 133. So maybe there's a good chance that we do drop here, find support, and then pop back up. So I wouldn't be surprised if there's a little bit more sell-off event coming on Coinbase. But coming back to the previous thought process, that we want to see Coinbase respecting this area. If 156 can hold, I think there are some longs over here. Big sell-off on Coinbase for the past few days. Continuation of a Friday sell-off into today, even though we got a big pop into the pre-market. So the question is, does it sell off again all the way back into the earnings VWAP and then find buying, or do we actually hold at 156 and start making our move back into 165, 170s, and then 180s and so on to the north side? So for the support, I'm going to put 156. For the resistance, I'm going to put 165. Infliction is 156 for me. If stock can hold 156, can look for long back to 165 or higher if Bitcoin is helping the long thesis. But if 156 cannot hold, then you're looking for that short, probably back to 132 areas. Bullish above 156 and bearish below. Okay. Obviously, very, very high importance of a stock, because the stock has been moving pretty drastically with tons of volume being traded. I mean, not tons, but decent amount of volume being traded in the past few days. So got to keep an eye on it. And this stock will actually help us once again find that trade on Riot, on Mara. One thing to point out, that Coinbase actually, and from going stupidly positive on the day to ended up being, completely red on the day and turning, almost a full 100% flip on the day. I think it was up 10% to being down 10%. So what's that, 200% flip on the day? Big moves over here. Maybe on. Is that a 200% flip? 100% flip would be just going down to zero, right? And then the next I don't know what I'm saying. Anyways, Coinbase completely flipping back to the downside over here, turning a positive day to the red side. Riot and Mara kind of did the same thing, but not on as big of a scale as Coinbase, because Riot only down 0.3 over here, as you guys can see, and Mara only down 0.2, but still holding off at yesterday's lows, on Friday's lows. Mara not breaking Friday's lows, Riot holding above Friday's lows on today's low. Today's low actually above Friday's low, so even more bullish kind of a move over here on Riot, on Mara. So if Coinbase can start pumping back up to the north side after holding 156, I think Riot, a move to 16 and a hold of 16 is a beautiful long above there, setting us up for all the way back up north. I think Mara could kind of look something similar too. Mara, however, it doesn't really trade as clean. Maybe I'm wrong. I trade Riot more than Mara, so I don't really know which one trades cleaner. Maybe Mara should be the one you trade more because it does a lot more volume, right? Mara doing 100 million, whereas Riot only doing 35 million, whereas Coin only doing 25 million. Coin also being a lot more spready, not able to manage the risk sometimes, so it's a little bit of a scarier stock to trade, especially if you're a beginner trade, so you got to be careful. So Riot over here for me feels a little bit more of a go-to stock, especially if we can get above 16. The first support being 15 area, that's exactly near Friday's low. So first support 15, second support 16, resistance at the moment basically 16 because we're under 16, right? We're under 16. Infliction will be for me 16. I want to see what the stock does into that $16 area. 15 would be an area to make a decision too. I mean, wouldn't mind making a decision at 15, but I want to see what happens at 16, because if we're at 16 and the stock is failing, that's set up for a beautiful short. But if we're at 16 and it's set up for as a hold above 16, that sets up for a beautiful long, and that is almost like an A plus setup for me. Whereas compared to 15, it might be like an A minus B plus setup for me, right? So notes, want to see how stock trades at 16. If Coin is holding 156. Why am I typing so weird? Is holding 156 and Riot is above 16, can look for longs. Bullish above ABOVE 16, bearish below 16. All right, Riot, color it orange. Mara, we're just gonna leave you out of the picture a little bit. You know what? Let's just go take a look at Mara. Let's stop. Nah, I'm gonna have to leave it out of the picture a little bit. I mean, Mara, I could see Mara easily pulling back a lot more than where it is, but it could also, I could be wrong on it. I'm just not sure what this chart, there's no real pattern for me over here. There's nothing really to make a decision of. Yeah, it's awesome that it held above yesterday's close, or right around yesterday's low, sorry, but not even. We actually broke below yesterday's low a little bit. So Riot just looks a little bit cleaner of a trade, and Coinbase will be that barometer to help us make that decision. So I'm just gonna remove Mara from my watch list for tomorrow. Not that interested on that one. Now, after looking at the Coinbase tech, what did I say so weird? After looking at the cryptocurrency sector, we're now jumping into the next hot sector on the day today, the crazy sector on the day today, which happened to be what sector would this be called? The pharmaceutical sector, the health tech sector. So the health tech sector, the pharmaceutical sector, the stock that shall not be named, is actually, what a monster move on the stock, getting above $30. $30 was a significant area on Pfizer. So actually getting above this area alone was pretty crazy. We got above that and actually held above that for all of last week, where I was not trading the stock or not trading the market at all completely. So did not even set up for Pfizer, did not even plan for Pfizer. And when Pfizer was moving today, I did not know the news. I wasn't going to just randomly trade the stock for no reason. But Moderna, Pfizer, Novavax all jumped up to the north side. Let's go see why. After miserable 2023, why this could be better. Moderna with one of blah 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 blah. What? That seems like a bullshit catalyst to me. That seems like a pretty bullshit catalyst to me. I don't know about that one, Chief. I don't know about that one, Chief. 30 is also not like a significant level or anything. I mean, you know, we could pop into all of this range over here, to be honest. There's a whole range. This is from the previous earnings report. We're holding the earnings report. We actually just recently got above the earnings report VWAP, so it's getting ready to now get a little bullish. The SMAs are turning. The EMAs are getting ready to turn also. The one is above the two, so temporary bullish indication now on Pfizer coming in on the technical indicators. Something on this, we have a video to watch on this today about how to use technical indicators better. But from what I see, the one is above the two, and that is a bullish enough of a crossover so far on the daily chart, at least a temporary crossover. We'll see if there is more continuation on this move to the north side on Pfizer. If you want to look for longs, I think you would be an idiot to not wait for 2830s to come back into play on Pfizer. Right? So for the support, I'm going to put 2830s. As for the resistances, we did see kind of 30 come into play today, but after zooming out the stock on the longer term chart, 30 just does not seem like a real level at all. 30 just seems like a fugazi level for me. It did kind of double top at 3020, 3030 area, but 30 is just not a real level, and I'm so glad that I did not make a decision at 30. There was a point on a day today where I thought, you know, the stock has made enough of a move, and I have a very strong prejudice against the stock, so I might as well look for a short right around over here, and I'm glad I stayed away from it. I also thought about a good little long on this stock, so let's actually do this real quick. Okay, let's do this in front of you guys so you guys kind of have an idea of exactly what we're doing. This is called playbooking, ladies and gentlemen. Clap it up, clap it up. We're gonna playbook a trade here. No, why is it on JNP? TraderPrad. I'm TraderPrad. Hello. Playbook. Okay. Oh, we can't. Okay, so we're gonna playbook a trade here. Nope, trade write-ups. We're gonna go to trade write-ups. We're gonna type in new, expand this bad boy a little bit. We're gonna do, what's the stock name again? PFE. We did not trade it. Tags will be bull flag breakout, right? Trade write-up template. Okay, trade write-up template. Category trade. How do you classify a trade? Classic bull flag long scalp on a stock that was very much in play today. Market was selling off. Market was selling off big time, but this stock was way too strong and just kept ripping up. Was a clean bear flag long, especially was a clean bear flag long. Okay, now that we put that there, context. News. Was there any news on this stock? Was there any news on Pfizer or any of these stocks today, guys? Pfizer stock. Let's also go here real quick on the Market Insider. Stocks moving midday. Let's see if we can find Pfizer here on this list. Okay, there you go. Drug maker jumped 13% on upgrade to outperform. So I guess it was just the upgrades all across the board from Oppenheimer. That was the main catalyst because we didn't really find anything else. Okay, fine, whatever. Upgrades on mRNA took the sector to the north side. PFE and NVAX joined that party. Daily chart. Let's take a picture of the daily chart, put it in. Oh, that's not daily chart. Daily chart. They want a picture of the daily chart for the trade write-up. So we'll take a picture of the daily chart, put it in the trade write-up. Bang. Okay. That was a daily chart. Intraday chart. This is the key part here. 5-minute chart. Intraday chart. Bang, bang, bang. Okay, take the picture of the chart. Level 2 box, we didn't really trade it, so we can't look at the level 2 box. How I traded it, once again, I didn't trade it. How others traded it, not sure if anyone in my office traded it or not. How I should have traded it was pretty was looking for the shorts into the high of $30, but stayed away on the stock. Was looking for the bull flag long, but decided to stay away because of my own hate for this company but that should not have kept me away from the trade. Take the money. How should I have traded it? So how should I have traded it? Simple bull flag long. Take the breakout with the stop at the low of 1030 candle and scalp out on 1R. Hold for the dream if the stock has one. How to find more of these opportunities? Can always find tons of bear/bull flag trades. Just need to see the scanners to find the stocks that are actually in play on the day, have volume, have catalyst, and a reason to continue on the breaks if there was one. Can't be doing this on random no name stocks without a catalyst. Solutions, blah, 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 blah. We didn't really trade it, so we don't really learn anything from it. But this, ladies and gentlemen, the idea of this whole thing that we just did is if you do more of these, you know, I haven't done these at all. I just kind of started this at the end of last year. But if you start writing up your trades, especially the ones that you missed, even the ones that you caught, even the ones that you traded poorly, you will start to recognize these trades more. You now have it implemented in your mind. And if I see a trade like PFE tomorrow, let's say I see a trade like PFE tomorrow, a stock that's on an absolute rip to the north side, it consolidates into a somewhat of a key area, right? Into somewhat of a key area, consolidates. See how the stock consolidates and then flushes, but on that flush, immediately pops back up. That's a big buyer sitting around these areas, buying up the position right back after a little bit of consolidation. Beautiful bull flag. You could have seen that on the tape if you were watching that stock, even if you were me at that moment thinking about shorting the stock, right? Let's say you were short. You were short, you saw the stock push down, you were thinking, okay, maybe there is a move, but then it immediately pops back up immediately without any second for you to, you know, get on the other side. That's the scare right there if you're short. So you jump out of that short. Now you flip long with the stop right at the low of that candle, and instantly you get like what, 2.21 risk to reward scalp. You basically get out 50% on a 14 risk. So what's that? On a 28-cent reward, you instantly scalp out 50% or more at a 1R, which is 28 cents profit to the north side, and then you get a 2.21 reward trade instantly for a quick little bull flag scalp. And then later on it comes back. Guess what? It holds that same level. Why? Because that buyer's still there. Holds that same level. The buyer's still there. Gives you another long. But you can see that it's not really pushing into the day's high. Struggling at the day's high. So you probably get out somewhere over here at $30. And you're long again at $29.83. You get another quick 20 cent, 30 cent scalp on that position depending on your entry. me being obviously a little bit of a bitch, made me stay away from this trade. But if I'm writing up these positions, writing up my trades, even the day that I missed the GPS trade, I was so unhappy with the way I missed this trade. Beautiful longs, exactly how the anchored VWAP playbook the textbook talks about. So writing up these trades have made me catch these trades, and I kind of wanted to do that live on stream for you guys to kind of get an idea for it. Don't take my word for it. If you don't want to do it, that's fine. I'm not trying to force you to do it, but don't take my word for it. The one of the top traders out there in the world still does this, even after 30, 40 years of trading. I don't think he's been trading for that long. I think he's been trading for a decade. One of the top traders in the world, who's been trading for a decade, still does this playbooking. Tons of traders on Twitter who you probably follow do this trade booking over here. Nathan Mashad is one of them. Nathan, do the trade booking, playbook your trades, and have a reason to, not reason, but have a way to kind of internalize them. So the next time they show up, it's almost second nature. You don't think about it. You just pull the gun and bang, 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 baby. Shoot, shoot, shoot. Pfizer. So coming back to the trade idea over here, looking for that 28.30 area to come back into play for some reason. If it does, then we can look for the longs off of there. But currently, I'm just going to stay away on the upper end of the ranges unless 31 comes into play, and then I can make a decision off of that. Maybe the stock's already around today's VWAP. Yeah, maybe somewhere around here into 29.50s if we hold, or if we get above 30s and hold above 30s, there could be a trade there. Today's high 30.30, I'm just gonna put that as like somewhat of a resistance area in my notes, but it's not actual resistance. I think Pfizer, unless it has a real important move tomorrow as well, along with this upgrade catalyst, which seems to have really boosted up this whole sector, don't think there's gonna be a big trade on Pfizer tomorrow. I mean, look how dead Pfizer was for like a whole week over here. It did pop up slowly, but it was pretty much dead the whole week until today, where the whole sector just took off. So MRNA, let's go see what MRNA looks like real quick. I mean, look at that beautiful move on MRNA, right back into previous resistances. That's a pretty solid resistance range on MRNA to keep an eye out for. So let me just quickly mark that up for me. And then here's another solid range of resistance that MRNA immediately could walk up to after testing these areas. Looks like we did test these areas, struggled, pulled back. The next area of contention is somewhere around 117.50 to 118, and we can see how the stock plays into that area. So look at this beautiful rejection of this area. Some would think that this area looks like a great long. You punch in, you get trapped, pull back, and then this is where you possibly look for that short. You build a short here, you're loving that short right back to VWAP. The stock did manage to go right back into that area in the after hours, apparently with very, very, very light volume. Once again, a bear flag long right here. You could have gotten long with an even tighter stop because you're now actually following a trend, right? Now you're actually following a trend. We could playbook this trade too, right? In play, bear flag long, maybe even some sort of a wedge long if you are really, really technical about these chart patterns. I know some of you can get really anal about this, but I'm just gonna call it a simple bear flag long with the trend behind it. So this one is even better than mRNA, sorry, than Pfizer technically. So let's just take a screenshot of this, and I'm just gonna throw it into my Pfizer trade setup along with that bad boy. All right, take that breakout. Your stop is on the break of this trend, which never really breaks. You're long somewhere over here on the 9 bar or even on that trend line. Breaks. Your risk is what, probably 50 cents. Your reward happened to be $5. Like, come on, that's a big trade right there on mRNA. Wish I actually caught this at the moment, but we missed it out. Maybe tomorrow we have an opportunity to see what happens right back into this high, or into somewhere around these areas that we're looking into, 111 or so. So we're gonna go back to my watch list here, put in 111 on mRNA. What a beautiful trade right there, ladies and gentlemen. We love seeing things like that. Someone in the chat, let's quickly actually go to the chat, see what the chat's doing. When you're at your old job, you use a multitude like Market Chameleon and I don't know. Oh yeah, okay, those type of free tools. Yeah, Market Chameleon is one of them. I use this for like after hour scanners and stuff. The CNBC watch list, I use that one quite a bit. I mean, every single morning I read CNBC watch list, and then during the midday they send out another watch list for what stocks are moving midday, kind of giving you a good little watch list for the midday movers or whatever. Finviz is a good website to keep an eye out for. The Chicago Fed watch tool, the CME watch tool, to keep an eye out for what the Fed might be doing. Oh, no rate cut still. Okay, that's great. Bitcoin Wisdom. This website I've been using quite a bit recently because this one shows you where all the there's quite a bit of sellers on Bitcoin here. You got a seller at 46,300. This seller got wiped out clearly. The 45,800 seller got wiped out. We got a seller at 46,300. We got another seller at 46,750. 47,000. Sorry, 47,300. And another seller somewhere all the way up here. So Bitcoin could just see some struggle. I haven't seen these many amounts of sellers pop up into Bitcoin for some time now. But these are some layering offers over here. Maybe profit taking offers, but someone's layering offers over here on Bitcoin at the moment. Pretty interesting to watch there. But now let's come back to MRNA. 111 area is pretty interesting to see for me. I'm waiting to see what happens at this 111. We just pointed out this 114.88 to 115.25 area. So for me, the first resistance is going to be that whole zone 114.88 / 115.25. So waiting to see how the stock plays out in that zone. This stock might upgrade from a blue color, which is the less important stock for me than Pfizer, and go to a higher, which is now, a high priority stock if we can hold this area. Also, it was an upgrade on Moderna that actually took Pfizer higher. So the stock that was in play more was Moderna. Right, so we got to watch Moderna more, in my opinion, and if it does give you a day 2 type of play, I kind of want to be interested in that move, because Moderna could easily go into this next zone that we were looking at after 115, which is somewhere into 118. So 117.70 to 118 area. So on the inflection, we're gonna put 115 in case the stock opens at 115. But if 115 is not where the stock opens, then 111 is the next point of inflection. Notes, if stock can get above 115 and hold, could look for a move to 118 on a day 2 play based on the upgrades yesterday. Bullish above 115, bullish above 111, careful at 118, bearish below 118, and I don't really know about bullish above 118. Well, I just careful at 118 and bearish below 118. That's the idea over there for Moderna, and that's what we want to do with this stock tomorrow based on how it moves around. And if it does something wild like what Coinbase did today in pre-market, then we kind of just have to make up a whole new plan in pre-market, which is not going to be fun. Not going to be fun at all. Let's go to the next sector over here, which looks like a travel sector, NCLH. I also want to take a look at CCL. The CCL sell-off today too looks like a pretty wide sell-off across the board on these stocks. CCL selling off almost 7%. NCLH selling off 8.5%. Not sure what the news was for NCLH, but big down move. Maybe some sort of downgrade on these positions. Whatever it is, they've been making pretty good moves. CCL especially, RCL also. I mean, monster rallies on these positions, but now they're looking to give back some of these gains. So waiting to see if some of these older areas that we thought would come into play didn't really come into play on the pump to the north side, come into play on the flush to the downside. CCL around $17. You could even draw down that 17 area all the way down to somewhere around here to 16.80. So 1680 to 17. Can CCL hold that area? And for NCLH, which was the more in play stock, pulling all the way back down to, you know what, I'm just gonna remove that one, put it here, because we have this beautiful quadruple bottom now coming into play almost. As you guys can see right there, quadruple bottom coming in right around 1814. So can NCLH hold up at this 1814 area and stay above $18 for a beautiful long? I'm gonna put 18. I'm just gonna put $18. Okay, $18 for support. If it can hold 18, that would be good, but if it can't hold 18, more downside most likely coming in. There's a good chance that the stock now, you know, dies down and just settles into this area a little bit, which is somewhere between 19 and 18. So in my opinion, I'm gonna put resistance right around $19, infliction being $18. If stock can hold 18, could look for longs, but yesterday's move doesn't excite me for the long side. If stock can get under 18, could look for day 2 shorts. Bearish below 18, maybe bullish above 18. Watch what stock does at 19, could get shorts. Bearish below 19. Okay, and CLH, basically the idea is if it does pop into 19 for any reason, maybe we can look for the shorts into that area. But if there is no pop, then you know, there's just selling off, then that's the more exciting trade, because now we're just kind of following on the weakness from today. We're breaking another key area that we were just making into recent history, and we're looking to go back into even more older history ranges. So looking for possibly even go back to earnings VWAP all the way to 1650. So looking to see what happens into this $18 area on NCLH. CCL, I'm just gonna remove it from the watch list because it did make a move down, but I guess the bigger move was on NCLH. It was a more in play stock for ourselves. And now we're gonna head over to ARM. Not sure why this floating range comes over there. That's probably from some sort of a pre-market move or after hour move on the IPO day, I'm guessing. I'm just gonna have to see if I can even access that range somehow. Where does that range come from, bruh? Okay. What is this? Oh, that's great. 15 minutes? Oh, there you go. That's where it comes from. What is this? Useless. That's what it is. It is useless. That's what it is. We're getting rid of these. Okay. Wherever this is, I want you right here. We're leaving the IPO lines in there. ARM's still doing decent amount of volume. I think if ARM can hold 68, we can look for some longs there. Yeah, market's selling off right now. I think there was some semiconductor news that came from Deutschland. That Netherlands was banning some sort of a chips from ASML to China. So maybe that brought down the chip sector completely a little bit overall. ARM selling off a lot more over here. Not sure what the specific catalyst for ARM selling off here is. But clear down move. If ARM can hold 68, possible long off of that. But if not, big down move again, baby. And you know how much we love those down moves. Down, baby. Okay, I'll stop. So big down move possible. A little bit of a range most likely setting up over here on ARM. Looking for buyers, looking for sellers, and so on. A little bit of action. If ARM... I guess looks like if ARM can get above 70.50, that's a little bit bullish. So I'm going to put 70/70/50 area to keep a watch out for on resistance. My infliction is going to be 68 on ARM. I'm going to put this color orange. I think for some reason it's pretty important. I don't know why. We'll find out if it is in pre-market, if it has volume. If not, it'll get downgraded on the... You guys hear these dogs? You guys see what I have to deal with? Jesus Christ. Alright. 68. It can hold 68. It's stock can hold 68. Jesus, chill out. They're coming in. So my sister-in-law and my niece are probably home, so these dogs are just going wild. If the stock can hold 68 and stay above, could look for some relief long, REALIEF long, but overall looking for possible day 2 continuation short, bearish below 68, maybe bullish above 68, but watch what happens at 70/70/50. So there you go. That's the overall idea for that bad boy. What relief. My spelling just sucks. Continue short. There you go. Okay. ARM. Next up, we got the driving why did I say it that way? The EV sector. We got the EV sector, all of which I think announced delivery numbers. Most of them sold off pretty drastically. I didn't actually. I was a little bit lazy here. I was a little bit lazy. I didn't look into what the deliveries were for what company, who did good, who did not do good. Did not do the research, did not care. We'll just care about what the move was, okay? The moves were obviously very, very drastically to the downside for some and not as bad for the other. Tesla did look like it wanted to sell off of this area multiple times. It gave you a triple top to short on the 5 minutes, but then it pretty much stayed flat on the day, right? Pretty much stayed flat on the day, even on the day where QQQ sold off, what, 2%, 1.5%? I think QQQ was down 1.75 at the time I was trading at one point on the day today. So QQQ down 1.7% over here, but Tesla flat on the day. So that looks like the market kind of liked their numbers, and they were fighting to sell off Tesla, but there were a lot more buyers being bullish on Tesla's numbers. I'm guessing that's what it is. But the same cannot be said about Rivian, because I actually saw some articles on my phone, getting blasted on my phone from Benzinga and other websites that I follow for trading, that Rivian actually lost a little bit on their deliveries. Hence, they triggered SSR. They went down quite a bit on the day today, and they sold off. And I think Rivian sets up a way better for a day two short compared to NIO, Lucid, or even Tesla. You know, people actually like the Tesla numbers. So maybe we'll zoom out Lucid here real quick. Yeah, see, Lucid choppy range. Oh, sorry, this is NIO choppy range. Stay away. I'm pretty sure Lucid looks pretty much similar to that. Lucid going back into what looks like could be a crazy support area. You know, yeah, and the volume also didn't really beat on the 30-day average. So moving on from that one, we'll just go to the one in play, which was Rivian, right? The one in play was Rivian. Go to the hot girl at the bar. You don't gotta go with the ugly fat chick on her friend just to make yourself feel good. You know, go get rejected. You'll still have fun at the day, okay? Rivian over here was the hot girl of the day today. We, however, had no trade on this position. I think there will be a trade tomorrow for a bigger continuation downside because of what the stock did over here right into this zone. It struggled to get above 25. Anytime we pulled up into this 25 areas or close enough to 25s, immediately sell off, and then a nice little consolidation. I had an alert at 24.60, like 70s on Rivian for the longest time, and the alert didn't go off. And now the sell-off happens. I actually deleted the alert today. So I think there's a big day 2 move incoming on Rivian, and I'll be looking to you know, sell any pops over here, starting with first on any failure to get above 22. So Rivian resistance $22, right out under 22 will be, I guess, for support somewhere in these ranges. Hello, where's my mouse? My mouse got hijacked. There you go. Any ranges of this previous area of 1950 to 20 could show up as some little bit of a support, but I'm not buying it, right? 20 area could show up as support, but I'm not buying it. I'll be looking to short that area too tomorrow, but I would much rather short any pops into 22, any pops into 21 on this stock. Infliction, in my opinion, will be 20. You might just get a chance to trade the stock at 20 off the open. You might not even get any opportunities to short the 22. I'm just putting 22 in my notes in case it does pop up there. 21 just might have to be where it pops into, or 2050 is where it pops into for you to get into shorts. Inflection, I think, will be 20 tomorrow. If stock, where am I typing? If stock can pop into 22, easy short in my opinion. If stock pops into 21, look for weakness. If stock opens into 20, look for 20 to look weak and not able to sit on the bid. Bearish below 20, bearish below 22, bearish below 21. Looking for that day 2 continuation play, basically, off of today's move. And today's move was a pretty drastic move. This stock is actual news-based. Instead, mRNA and Apple were just upgrades and downgrades kind of move. Oh, man. Am I dying, chat? I think I am. But, thankfully, not a lot of stocks left on the watch list, and if you do want to subscribe to that watch list, you can do so by subscribing to my Patreon. You get an email every single night sent out to you, as long as I'm trading the next day. Hopefully I'm not dying sick or something. But yeah, if you want to sign up for my watch list, you can do so every single day. This is what the watch list looks like. You can sign up on it on Patreon, and it also gives you the ability to get on a nice little one-on-one 1 hour session where we go over your trades, where we go over your trade plan, and I try to help you build your trade plan, kind of help you get better with your psychology, with your trading. And hopefully, if you allow me to stream it on live, that'd be great. If you don't want to stream it on live, that's fine. We can do it off stream too. Now, going to the next stock on our watch list will be the other hot girl on the stock that actually announced news, Tesla, and did such clean movements off the open. Wasn't really looking at Tesla. I think, in my opinion, I like Apple. It's a lot more cleaner. It doesn't chop me out. And Apple didn't chop me out. Was a lot more cleaner. Look how choppy this one was, right? So Tesla, you Rangers out there that love Tesla, you guys can go out there and have fun with it. But this level is, oh my goodness. So if for any reason Tesla can get above this juicy level of 251.25, especially after today's move, that looks pretty damn bullish to me. That's the only price I'm putting on Tesla, and that's the only price I'm going to care about. If stock can get above 251.25, can look for longs. If not, just not going to trade it. Bullish above 251.25. So the idea why I don't want to trade this stock if we're not above 251.25 is, why did we not sell off today? Why did we not sell off today if the market sold off the way it did? Look at my watch list. Red, right? So if we didn't sell off today on Tesla, especially with the numbers that they announced, there's some big buyer buying up, soaking up. Soaking, if you guys know what I'm referring to. Wink, wink. If someone's soaking up this position on a market beat up day, then I want to see how they do if the market goes up tomorrow. If they are able to defend this 251.25 area, right? Can they pop it right back up? Pop that pussy. No, I'm joking. Pop it back up. All right. Square. Let's go to Square. See what happens over here on this position today. Was this even in play? Maybe, maybe not. Where does that line come from? I think from back here. Yeah, it does. Okay. I mean, if 70.50 holds on square, possible trade over there. I think that's the only area I kind of want to watch. But besides that, I kind of don't really want to do anything on this position. Yeah, I'm just going to watch 70.50. Importance blue. It did make a move today. There is a possible trade on here, but I'm not sure if the stock brings in volume tomorrow or not. So it's kind of just a pre-market situation. Bullish above 27 70.50. And as for the notes, this stock can hold support, could look for a long, but it's kind of counter trend, question mark. The next stock is not DGH, it's DG, Dollar General. Yeah, pretty impressive move on Dollar General today, if you ask me. Not sure what the catalyst was for this one either, but pretty damn impressive. I was watching it on my side screen. Not enough volume for me to push any buttons for the long or the short side, but I was watching Dollar General. It was making a pretty good move. Finally taking out that 139 area, which was all the way from here. So finally taking out that 139, getting above the earnings day high, which is what, 140-ish? Getting above the earnings day high of 140 was also like a damn, okay, I see you. And oh, now that I'm remembering about Dollar General, if you guys remember when I told you this will be pretty interesting. This is the day that the CEO change news was announced. This is the earnings, and we were looking at the stock kind of come down over here. Oh my god, I have to playbook this one too, but I won't do it in front of you. I won't waste your time with this one. I'm just gonna quickly get this ready. Trade write-up template. We're gonna put this one DG. AVWAP pinch breakout. That's the tag. And then I'll worry about this trade write-up on my own time. I won't waste your time for it. But my goodness, what a beautiful long on this trade. Look at that. So basically the anchor VWAP pinch setup, it requires a pretty two key important anchor VWAPs where the stock kind of has been rejected off of and then has been finding support off of. You can see how we've been finding support off of that CEO news. The earning news has brought in a little bit of a weakness, but then eventually the weakness nullifying, the buying kicking back in and taking the stock right back into the earnings day. So now on any sort of a pullback into 140, 139.79, you kind of want to see what happens. We have this zone, this whole range, in my opinion. Let me just quickly do this because some of these lines are a little confusing. Get rid of that. Thank you. Put that there. Thank you. Put that there. Thank you. Put that there. Thank you. So 139.12 to 139.79. Let's just say 139 to 140. On any pullback into 139 to 140, you want to see how the stock trades. If we are able to build supports, form a nice little, cup and handle somewhere in the range of 139 to 140, or even a nice little smiley shape, some sort of a bullish pattern in that 139 to 140 on a pullback. That's very, very bullish for us to look for a long over here on DG. So my inflection is only going to be my support area. Not really looking to see what the resistance do. I think resistance is much, much higher into 140 areas. So tomorrow, possible clean day 2 continuation north side after breaking out the significant level over here on the daily chart today. A little bit of a rise on the volume too. Not too bad at all. So that's exactly what I want to see on a move like this. You just got upgraded to a higher priority stock for tomorrow, my friend. Good job, Dollar General. So DG, let's put that one in there. DG, need to see a bullish pattern in the 139 to 140 area to think about long. But if stock is already above 140 and not looking to get down, could look for a long move. Stock has room to 150s on swing scale. Okay, bullish above supports of 139/140. I can't type because I'm typing too fast. I'm trying to type too fast at least. All right, now let's go to Intel, INTC. Here comes a tech basket. I know some of you have been patiently waiting, aka Barkat Danani. Barkat Danani has been waiting for us to take a look at the tech sector. So let's go take a look at the tech sector, starting with Intel. Intel, man, what a beautiful breakout on Intel. I was pretty much long at like $25 on Intel, and now watching the stock at $50, gotta love it. I think I cashed out recently though, around 47, 48 something. Can't remember what price I got, but I'm pretty damn happy with it. Now the question is, what can Intel do on a pullback? Can Intel hold this 47 areas? If you're not holding 47, I think we got an even bigger pullback over here in the 45s or something. So watch out for Intel over there. I'm not really that keen on trading Intel tomorrow. I think if I'm trading the big tech stocks, I'm going to Apple, I'm going to Nvidia, I'm going to Microsoft, Meta, Google. Intel, I'm not trading Intel tomorrow unless it has a strong catalyst behind it. But you can keep an eye out for it if you want to. The next stock over here, Apple. Apple, obviously the day 2 stock after today's move. Monster move today. Sold off drastically. Took half the market down with it. So if Apple kind of follows the day 2 idea, then we want to see what happens around some of the key areas that the stock has created today, somewhere around this 187. If we do pop right back into this 187 and reject, that's a beautiful short opportunity that you don't want to miss out. If the stock pops back into 186, which it kind of held at the first opening drive, yeah, I guess you could call it the opening drive, where it held off the opening drive, you kind of want to see what happens into that 186 area too. So Apple, you want to see if there's a continuation, or if the market for some reason now has a big strong catalyst to the upside. Does Apple use that catalyst, negate the whole downgrade, and launch itself back up? I don't think it does that, because Apple's news was pretty bearish, and I think it's has some meaning behind it. So I don't think Apple goes back up there. But I don't get paid to fortune tell. I get paid to actually punch keys and push executions, and we'll do that tomorrow based on how the stock moves around. So Apple over there, quick little idea. AMD, you could take a look at AMD for the large tech stock baskets. Nothing wrong with this one. It has been making pretty beautiful moves to the north side, but I'm call it a bias mentality, because I was an investor on AMD for such a long time. I guess I can't say investor. I was a bag holder on AMD for such a long time. My mentality is, you don't trade AMD, you just hold it. But no, that's a completely wrong idea. Right now though, AMD kind of sets up as the same trade as Intel for me. Nothing really too spicy. If it does go back into supports of, what is this, 136, 135, maybe there's a long over there, but doesn't really excite me. This chart pattern doesn't scream like an A+ setup to me, so I'm gonna stay away from AMD. Let's go take a look at Amazon. Amazon pulling back a little bit, possibly could see supports building back over here. Depends what the market does too. You gotta watch what the QQQ market's doing. If Amazon has any bearish sentiment behind it, maybe we see a drop all the way back into the earnings VWAP, which is around 143ish or so. For some reason, looks like I have 2 anchor VWAPs there. What is that? Oh, that's a conference call. That makes sense. Okay. Amazon getting that earnings move right back up. Look at all these anchor VWAPs that I got going. Jesus Christ. Do I need that many, dude? That's the previous earnings one. Okay. What is this? 52-week high? That's no longer the 52-week high. What is this? That's a moving average ribbon. Okay, we can leave that. What is this? Recent gap down. Get the hell out of here, Prad. Trying to be too fancy here, mate. Okay. And we can probably get rid of the conference call one too now, honestly. I think that's the conference call one. Nope, sorry. That's the conference call one. Yeah, get rid of that. Okay, move that back to the earnings day. And ta-da! We cleaned up our chart on Amazon. Anyways, coming back to the whole idea on Amazon, I think Amazon easily could go back to 143. The markets have rallied pretty drastically. It's time to calm down a little bit. Pull back, come back to reality, go test the buyers. Are there still buyers there at all-time highs at the start of New Year? That's the question. That's the million-dollar question. Are people still hungover after vacation and not really here, and the only people who are trading are the degenerate gamblers who are addicted to it, me? Or are people actually here portfolio managing? The hedge funds, the big money traders, are they actually portfolio managing? Are they actually buying the big tech as this all-time high areas? Are they buying QQQ at all-time high areas? Or are they, it's time for the cycle to kick back in. It's time for a little bit of small caps to move. It's time for health sector to move. It's time for that to move, this to move, you know, whatever the cycle's next step is. So be ready for the change in cycle and don't get caught up in the hopes and dreams, right? Follow the flow, follow the flow. So understand that Amazon easily could go back to 143 from this 150 area. At least that's my opinion. That's my opinion. Okay, going to Meta. Wow, that's a pretty good wick on Meta right after breaking 342. That's not bad at all. Looks like we bounced perfectly off 340. Today's low was 340.01. That's pretty cool. Today's low was exactly 340.01 on the stock. So that could mean that there was a pretty big enough of a buyer that's absolutely held the stock and did not let it break at all. Missed out on this one. I wished I had some sort of an alert at 340 on Meta. So let's just put that as a support on Meta, alert 340, in case it does come back into play tomorrow. And if it does, we can look for it to see what happens at 340. Microsoft, let's see what's going on in Microsoft. Microsoft being an absolute beast in this range at the moment, does not want to break the range. So if Microsoft goes back down here tomorrow and actually breaks the range, there could be some fun. Look how the range line is at 366.78. Yeah, 366.78. Every single low of these days are pretty much around that level. The low is 62s on this day. We got 32s on this day. We got 10s on this day, a little bit lower, but you get the idea. Today's low 77s. So this range has been holding so purely from 366 to what's that? Let's just say all the way up here, 377.50, 378. If the market continues to show weakness, we could see the break of this range. But right now, something that stands out pretty clearly is the earnings VWAP consolidation coming in on Microsoft. Earnings VWAP beautifully consolidating, holding above the earnings VWAP, bouncing above the earnings VWAP with solid wicks right above it. So there could be more buying in this area on Microsoft. And if market's selling off, this one could continue to hold. So be careful to short this one. Be very, very careful. You want to short it on the pops and the higher end of the prices, not closer to 366s, not closer to 370s or so. You want to be careful around those areas in my opinion. Maybe not 370. Maybe you could short 370. Google. Let's go to Google. Yeah, this choppiness. This is why I go to Nvidia and you know, the other movers like Apple, Amazon, Meta, right? The easier ones. Google, I don't really like day trading Google. It's pretty choppy for me sometimes. I don't like it. But currently it's holding up in this beautiful range that we made. This was the previous range that we were holding in, but we are popped up and now we're looking to turn this little box into a range in itself instead of using this whole range. So looks like this, whatever this earnings VWAP is, also coming into play over there. Whatever this one is. What is this one? PM Biden news? What was that news? Pre-market Biden news. I forget what news that was, but I guess it kind of came into play here. All right, kind of came into play here, but that's oh, you can also just say that the trend line on Google that we had, where did that trend line go? The trend line disappeared. I'm so confused right now. But oh well. Google, I don't really see any play in it for myself. Nvidia, we got a good short on this one today. A quick little scalp on it, but I don't really see a trade in it in this one too. Let's go see Netflix. Ooh, Netflix looks like it could sell off on a beautiful pop. And Netflix, if it does pop up, you could look for some shorts on this one. I like the possible setup over there on Netflix. But let's quickly go to QQQ, as QQQ is currently showing you possible supports coming in. This is the December anchored VWAP. It's not this month's anchored VWAP, but if you kind of see that we are exactly popping off of that. Also, previous low made on 14th of December on this stock, kind of coming in as a low for today. If QQQ gets under 400, that's where maybe fun opens up on the short side for the tech basket. But if QQQ doesn't break 400 and holds 400, there could be some relief rally on the QQQ tomorrow. So I'm putting down 400 as my level to watch on the QQQs. Now let's go to the S&P 500. S&P 500 holding much better than the Qs, only down 0.5, ladies and gentlemen, only down 0.5 compared to almost 2% on the Qs, right? So very, very selective you got to be when it comes to trading these positions. A IWM also only down 0.6, 0.5. Made a little bit of a, I don't know what that candle is. That a doji? Is that a hammer? That's not a doji, but a little bit of a hammer. I don't know. Either way, IWM currently pulling right back to FOMC anchored VWAP right now and looking to see if buying can step up into the FOMC anchored VWAP. However, QQQ getting below the FOMC anchored VWAP. Yes, it is. SPY is still above the FOMC anchored VWAP. Yes, it is. Or it's at the FOMC anchored VWAP at the moment. So your weaker stock basket is obviously the tech basket. So if you want to continue looking for shorts, you got tons of them coming up most likely tomorrow. But if SPY, IWM is relief rallying and QQQ is above 400, then you got some possible longs on the tech basket tomorrow, right? So that's some fun activity possible over there. All right, let's go back to the come on, dogs, calm down. Let's go back to the chat over here, see what I missed out on. You would use Flow Checker, but yeah, Flow Checker is they died. Rest in peace to Flow Checker. They're not active anymore, sadly. So yeah. Sean, what's up, Sean? What's up, brother? How you doing? It's 200%. Lol, you know what you're saying, just not a market maker. Yeah, exactly. I remember that comment from earlier on the day. I made money on Pfizer. Yes, we get it, Alex. We saw you on Discord all day today. I think that was you on Discord. Are you Razrar or whatever on Discord? I'm guessing that's what you were. But yeah, good job on your Pfizer trade. You actually put Pfizer on my watch list today. So yeah, that was good. It was strictly a TA, technical analysis trade. Beautiful. That's all you need to do. Look at the chart, see what the chart's telling you, take that technical analysis, then use the levels that you formed off the technical analysis, study the tape. Now you look at the tape at that levels from the technical analysis to see if it matches and confirms your thesis, and if it does, then you get long and have some fun, baby, and have some fun on that. So look for that type of opportunities over there on your trades. The next one on the chat over here, XLV. Yeah, you were talking about XLV too. Is that the healthcare sector? Yeah, holy moly, healthcare sector really breaking out today. Yeah, look at that. Beautiful. Yeah, maybe a pullback on healthcare sector, and then we can kind of dip buy or whatever. Could also be an interesting trade opportunity. Yeah, I like it. XLV. I did not know this was the sector for healthcare, and now I do. So I'm going to put it in my notes. Thank you so much. Put it in my notes. XLV is the health SPDR sector. Okay. ETF, XLV. Thank you very much, Alex. M. Allen saying Happy New Year and everything. Thank you, brother. Much appreciated. Happy New Year, not just to you, to your family, to your friends, to your dogs, everybody. Happy New Year to everyone in the chat. Dider's in the chat. What's up, Dider? Hello. Happy New Year, says Sky. Happy New Year, my friend. Just catching the end. Apple, please. Yeah, we just talked about Apple. I mean, Apple, it's going to be very technically based for me. I already, Apple was my #1 trade today. It's going to be very technical based, and I'm going to have to be very, pattern based, right? I want to see what happens at 187. This was my short today. The second half of the day, I had a short at 187. I got out very poorly and I missed out a big move. Off the open, I had a short. That was a monster trade too. I got out somewhere over here, but I poorly traded this one from where I shorted it. And I think for some reason, this area could come back into play tomorrow. I will not be surprised if we're right back at 187 tomorrow and struggling at 187 tomorrow on Apple. So you know what? I didn't even put it on my notes. I kind of forgot to put that. So let's just put it 187, infliction 187. I'm going to put 187 to 187.35. We can even go to 187.50s, honestly, but I'll put 187 to 187.35. A note, if stock pops and rejects 187 areas, beauty short setup in my opinion. Bearish below 187, bearish below 186. Kind of want to be careful into 185. Don't really want to be making a decision into 185, and I think the stock in the longer term scale is going below 180. I'll be honest with you. I think it's going back below 180. Looking for oh shoot, I didn't even show the screen. My bad, chat, my bad. I've just been showing you my face this whole time. There you go. Let me show you. So this is where my short was, right around this area, and I took that profit all the way back down. Off the open, I had a short right in this area, and I covered it right in this area, which was perfect, right? Short at the highs, cover at the lows. But then when I had a short in this area, I pretty much covered it right here. Did not even hold it for the low a day, and I missed out on a bigger move down. So I think this area comes back into play tomorrow for some reason. 187 comes back into play, and if it does, a rejection of this area, mamma mia. But if it doesn't, then you want to see what happens if it's forming some sort of a frowny face, as Michael Noss calls it, or if it's forming some sort of a bear flag after already flushes off the open, consolidates and gets ready for a bigger flush after that, kind of what it did over here, then you could look for that trade setup too. So there's multiple opportunities over here on Apple that I think will show up tomorrow, and I am very, very interested for those. Trust me. All right, that, ladies and gentlemen, was pretty much our watch list for the day. Let's go to actually show you what the economic calendar is, see if there's anything important. Ooh, ISM manufacturing PMI coming out at 10 o'clock. We also got Joel's job openings coming out at 10 o'clock. Atlanta Fed GDP at 1 o'clock. FOMC minutes tomorrow. Oh shoot, 2 o'clock, ladies and gentlemen. That might be a pretty important day, because imagine they say something crazy like we're going to start cutting rates or something crazy like that. So that's going to be pretty much fun, a pretty fun event to see what happens at 2 o'clock. You don't want to be missing, don't want to be heavily into a trade at 2 o'clock, nor do you want to miss out the opportunity to see what happens at 2 o'clock. Sometimes it's a nothing burger. Most of the time it's a nothing burger, but there's an opportunity that something fun happens over here on FOMC minutes tomorrow at 2 o'clock, so watch out for that. ISM manufacturing prices, so obviously 10 o'clock is a 10 o'clock, 1 o'clock, 2 o'clock, pretty important times tomorrow on the market, so watch out for those. Keep an eye out for those bad boys. Now, going into the last half hour of the stream over here, you guys are more than welcome to join me, but I'm going to basically be watching 2 YouTube videos, both of them that were dropped by SMB Capital. It's part of my routine. It's part of my nightly routine, you know, create a watch list, look at stocks, look at a YouTube video, learn from it, grow from it, at least 1% a day. Compound on that growth, get better, and we are on the road to being a millionaire, right? That's the plan over there. So you're more than welcome to join me on this YouTube review. If you want to stay, I would appreciate that. Let's go over here and watch this baby. Man, my throat is so itchy.
Every trader is taught to use indicators.
I'm sorry, chat.
And virtually all of them are using them in a way that's flat out wrong. In this video, you'll discover why and how. Nearly every trader is taught to use indicators. and virtually all of them are using them in a way that's flat out wrong. In this video, you'll discover why and how to be one of the traders in the top 1% actually using them correctly to make profitable trades. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
We're here with Garrett because he has some really bold thoughts here, and we want to get into it.
What if I said everybody on the internet is wrong about indicators? That almost nobody has it right. Indicators seem to really stir people's emotions. It's a polarizing subject. It's like kind of like the politics of the trading world. Everybody has a strong view. It's become such a lightning rod, I feel, that it starts to lose its meaning after a while. And it's actually amazing to me that something so mathematical, so fundamental can be the cause for such debate. And look, that's great. I like
it's actually a good point.
I love debate.
That's a good point. You know, people argue about my indicator's better, my indicator's better, my indicator's better, my trade plan is better because I use this indicator this way and use this indicator the wrong way, and they fight about it. Bro, there's no right or wrong way. It's math. It's effing math, okay? It's simple formula. Put in number, get an output, use that output number to help you form some sort of a thesis to get a trade. Right? But people just fight over this shit. It's pretty funny. That's a good point, though.
I'm sure I'll get all kinds of backlash in the comments, and that's okay. You know, what kind of boring place would the internet be without controversy and passion?
Yeah,
right,
good
Jeff?
point.
So, do indicators have real value? What are their value? What are indicators really for in trading, and how do they actually help us? And I know a lot of you get it. I get thoughtful emails from traders all the time, but something needs to be outlined, organized, established. Indicators are too fundamental to let them remain just some enigma or magic potion for trading strategies. So today, in this video, I want to tell you what indicators actually are and how to use them. And in the end of this video, I'm going to share some back tests from a real algorithmic model that we're developing in order to demonstrate the power.
That's interesting.
So where are people missing the point? There are a few arguments I hear all the time. First, there's the anti-argument. So like indicators are useless, right? But this is wrong. Indicators are universal statistical tools. Those who say indicators are lagging are missing the point. Everything in trading is lagging. There's no crystal ball at all. Like all we have are
I got 2 crystal balls.
Probabilities and risk reward, expected value, and different ways to quantify in order to set rules, in order to capture those risk rewards and probabilities, right? We never know what the outcome is going to be.
Yeah.
And then on the other hand, there's the pro argument. Indicators are the answer to my trading problem. Those who say indicators are magical tools, those searching for the single perfect indicator that will turn
the holy grail indicator.
All trading
I used to be that guy. I used to be that guy. I used to, back in the day when I found out what the VWAP was, right? What the VWAP indicator was, I was like, yo, this, before I knew what VWAP was, when I just knew, like, you know, how to put an indicator on a chart and how I would put on the VWAP indicator, I was just learning about trading. I was like, this is the magic indicator. This is the indicator that's going to help me buy a Lambo. I'm going to call it the Lambo indicator, right? Because that's the Lambo. That's my gateway to a Lambo. And that's what I thought the VWAP was. And then eventually you learn more. And then you're like, wait, VWAP is just telling you what the best price could have been, what the premium price should have been. And anything less or above that is not as good of a price. So that's what VWAP tells you, and then you kind of understand to formulate trades around that area. But beginner traders, new traders, retail traders who are still not really there yet, they're all just like hunting for that holy grail trade, holy grail setup, holy grail indicator, which is kind of like the holy grail, just doesn't exist.
About it the wrong way. Indicators are not strategies. They are certainly not magic, but they're not strategies. And I think that's a really important point to make here. So what the hell are they, and why do we use them? Number one, indicators are features. And this is not a term I made up. This is a technical term used in machine learning and model building. And to illustrate
It's a
this point,
feature.
instead of thinking...
It reminds me of my day back in when I was a software tester. And anytime I found a bug in the software, reported to the engineer who coded it, he would say, it's not a bug, it's a feature.
Thinking about building a strategy, think about building a car. So you'll want to decide when you're building a car which features to build into this car so that it performs optimally. And this will depend on the purpose of the car. Will it be driving off-road in the snow? Will it be racing on pavement? Is it for the family? Is it for a car show? So for some applications, four-wheel drive or anti-lock brakes can enhance a car's performance or safety, but none of these features alone make a complete automobile. So in the same way, a single feature is not a trading strategy.
Okay.
But it can improve the expected value of a trading strategy by handling an important aspect of the strategy, an aspect that we want to quantify. And just like with our car, whether or not a specific indicator will improve our expected value depends on the strategy and the market environment. You might find that defining volume in a certain way and limiting your
You think these traders like being filmed?
Threshold of this variable,
They're probably so
improves the
pissed off. They're
risk-reward
like,
strategy.
dude, get away from
You
me.
might
I'm
find
trading.
that defining momentum in a certain way and scanning for the highest values of this variable improves your win rate significantly. Or you might find that neither of these indicators helps your strategy in any way because these indicators are not measuring the variables that drive your expected value, right? So like heated seats are awesome in a car, but not in Florida. So just like with the car, there are probably going to be a combination of features that define your strategy. The second point is that indicators are just statistics, just a way to organize data. And that's really it. They're the same classic statistical tools that scientists use to study bird migration patterns or whatever else they're doing, right? So distributions, mean, median, mode, standard deviation, normalization, derivatives, like all of these things, these are not unique to trading. So every indicator is derived from these classic fundamental statistical tools.
So one thing you're saying here is instead of looking at the indicators as guidelines or as a guiding look forward, we should use them from the context of studying the price action based on the indicators and what the indicators are telling us?
Yeah, that's a great way to look at it, I think, because, I mean, look, like, it's not so much I found...
Why does their background look like it was taken from SpongeBob, bro?
My secret weapon.
These are
It's more
SpongeBob,
like this.
Hold up. You guys gotta see this. 5 years later, SpongeBob. See what I'm talking about? You see that background? You see those backgrounds? Doesn't that look like that?
Strategy. And there are things about it that I need to quantify in order to find out if certain variables give me any edge. And so in my search for the ability to quantify this thing, I'm going to actually have to stumble upon indicators or features, right? So just like we kind of gave that list of the statistical tools that the scientists use, like in trading, we have the volume profile as a distribution.
I like volume profile.
Control is a mode. Moving averages are a mean. Bollinger Bands are a standard deviation. ATR is used to normalize price moves by volatility and so on. All right, so how do we use indicators? Okay, so number one, like understand what they're measuring. And I know, Jeff, you're like really big on this because like you always tell the new class, like you got to know like how this thing's built. Like
every trader, it's one of my pet peeves. Every trader that puts an indicator on your chart, you need to understand the basis of what that indicator is measuring. You have to understand the situations in which that indicator is helpful and when it's actually taking away some of the edge in your trade.
Yeah, and we want to do this because we want to have the option to use the tool, right? And to quantify a very deliberate dynamic in a specific situation and a specific strategy. All right, so curiosity leads to invention. So I always think about like, what am I trying to quantify? And then I go try to quantify that thing and then test that variable and learn if it improves the expected value or not for my specific strategy. So it's all just math. And if we learn the math behind it, we can kind of like demystify the whole indicator thing.
So you take an indicator and you just put it on the chart.
No.
You take a strategy and you think about, or you filter down what indicators might be applicable to that strategy.
Yeah. Yeah. And a lot of the way that happens a lot of the times is I'm thinking about like a variable first. Like every time I see this trade go off, I see an increase in volume. Like, gosh, like I wonder if I could like somehow find out if there's something I could measure that would guide me to filter out the bad trades and get the good trades, right? So now then I start to look at different ways to measure volume, and like here we are, like looking at, volume indicators.
So you start with a purpose, and that purpose isn't driven by what does this indicator do and when does this indicator apply. It's driven by what's happening in the price action, and then you're instantly filtering out a ton of indicators or features by doing that.
Yeah.
Yeah.
And then you're getting down to a very short list very quickly.
Mm-hmm.
It's like
Because when people say
10,000
indicators,
stocks
a
in
lot
the
of
market.
times, when you say which indicators will work on a back test, we have 700 indicators that are coded into our system to be able to pull and back test on.
That would be hard.
That'd be a lot.
Yeah. Let's go over an automated strategy that we're building and show how the addition of the right feature can make or break the strategy.
Okay, let's see this.
We needed
this
to
is pretty
quantify
interesting.
something about the strategy, right? So we had a theory and we needed to test it. And it was an indicator that allowed us to quantify this thing. So I'll show the back test, and then we'll demonstrate how this affects the performance of the strategy.
And I hope we can talk about the strategy too.
Yeah, we can. So here we have a back test.
All right, what am I looking at?
This was an initial back test for a strategy idea. And this particular strategy is an intraday long strategy.
Lost
buying large
30K
gap
in
downs
like
in individual
13
stocks,
days.
where we have a specific execution
But then
algorithm around
started
these signals, but we have
Reversing it.
not
ended up
really defined any
30K?
environmental aspects of this trade. So we kind of have an execution style, and we know we want to buy gap downs, and it's actually doing okay considering like how little we've done to it here. But you can see like this is not really anything you want to trade, right? Like even though it ended up positive, like that's a pretty big drawdown. That's not like totally what we want to see. So the thought here is this is a mean reversion strategy. Right. And we don't kind of know that for a fact. We're just thinking that way because that's kind of how we look at the market. We might actually be proven wrong. Right. So we wanted to test whether the stock being more extended to the downside helped the expected value of the trade. Because again, these are gap downs. Right. So it's like we can measure like how far the gap or on a higher time frame, on a shorter time frame. So we have to find a way to quantify extended so that we can test this. So let's think about measuring how many ATRs the stock is from a long-term moving average. And this helps us measure whether being extended on the higher time frame after a big gap has any bearing on this strategy. So a Keltner channel, which is something we've talked about before, measures ATRs from a moving average. So we built a form of this into the script and looked at this variable against our P&L. And we studied whether the amount of ATRs from this moving average correlated with the performance.
And more specifically, doesn't the Keltner channel measure the standard deviation in terms of ATRs?
The Bollinger Band studies standard deviation, and the Keltner channel studies ATR. And if you kind of look at them, they're the same. Like they're achieving the same thing. So someone else could have decided to study standard deviations away from the moving average and might have come up with the same exact outcome.
But you're still getting it down to this very short list.
Mm-hmm.
Okay.
Yeah. And so we found a threshold of ATRs where performance dramatically improved. And we can see that in this second back test that we ran. So we basically found that if it was extended a certain number of ATRs from that moving average, then beyond that threshold, the win rate and the risk reward went up.
That's pretty
lot.
crazy.
So we basically filtered out anything that was
TH, Happy New Year, sir.
and
Happy
ran another
New
back
Year.
test. And again, this is all in sample data. So, this is the testing phase, right? So you have to test it out a sample after you've studied it and stuff, but we're just studying it, right? We're just getting ideas. We're kind of knocking things around, like getting to understand the data. So now we can understand that there's a mean reversion element to this trade, where before we kind of thought there might be, but now we're thinking, okay, like there's this seems to be mean reversion. Like, why do we think that? Because we're kind of seeing that the more extended it is, the more it tends to bounce back. So we went one step further and we saw that the magnitude of this ATR extension.
Whoa, we got a
continued to
subscriber.
correlate.
What's up, Lori666?
And what that
Thank you
means
for
is that
subscribing.
the
Welcome to
more
the
the-
TraderPrad
more
family.
ATRs extended
Appreciate the
than
subscribe.
average, the better the P&L got. So what we did was we scaled the risk based on the number of ATRs. So the more ATRs, the more we're going to risk. Okay. And we increased the ATR threshold slightly as well during this backtest. And this further improved the expected value. You can see on the chart, it actually looks very similar, but the drawdowns are less. And you can see things like the Sharpe and the comma ratio and stuff like that are a little bit better. So after all this, like after I've kind of knocked both sides of the coin and said that, indicators they're not nonsense, but they're also not magic. Like, what is the grounded response to learning about indicators? Like, in my opinion, is, and this is the attitude we kind of see on the desk a lot, is like, hey, like, I wonder, when you learn about an indicator, I wonder if that might help me quantify something that matters to my strategy. Like, I wonder if this might help me build an alert, help me filter out favorable environments for my trading signals, more clearly define my entry signals so that I don't make up trades, which is something you talk about, Jeff, all the time.
Making up
It's a great
trades.
term.
I've been guilty of that many times.
Maybe it doesn't do any of these things, right? It's absolutely true that most indicators won't help your strategy, but one or two might. And this is why we learn about all of them, so that we kind of have them in our arsenal and we're able to employ them when needed. So on our desk, it's very clear to me that there are many ways to make money. Like, there's no single way to do it. There's not really any sense in being dogmatic about any one trading approach. So, push back. If you disagree, let us know if you think indicators are useless. Let us know if you think they have been the answer to your trading as well. And if, we can continue to debate around the subject. And also let me know if you like it when I provide real backtest examples, because this is something we can do more often if people get a lot out of it.
So you're an active trader, not doing.
So
as
that
well
was
as
a pretty simple video. I mean, more basic video for some of you guys. Some of you guys don't even need to see this. I kind of didn't need to see this. It was a good refresher, though. It was a great refresher as to, what to expect, what not to expect from like someone who's talking about it in terms of a prop firm scale, right? These guys are a big prop firm. They train a bunch of traders and so on. So they're kind of explaining to you on a dumbed down level what an indicator is, how you should even understand the indicator before you put it on a chart. Indicator is not a reason to trade, but it's a reason to look at the stock at that level and then help your setup. If you have some sort of a setup, a bear flag setup, or some sort of a bull flag setup, or a cup and handle setup, or some sort of anchor VWAP setup, whatever your setups are, whatever your playbook is, you use that indicators to help you facilitate in your setup. But just because the indicator is telling you something to do doesn't mean that you do it, right? That's not enough of a reason to make a trade. An indicator is not a trade itself. That's what the video was talking about. Pretty good video overall. I liked it. Good refresher. Hopefully you guys got to learn a little bit from that one. We do have another video to go to after this one, as we still have about 15-ish minutes left on the day here for 10 o'clock, and then it's time for bedtime for me. Sadly, no gaming for me tonight. I've made a very strict rule for this year that by 10:30 to 11 the latest, I have to be in bed. So if this stream is ending 10:30 today, or 10:15-ish, there's no gaming today for me. So I'm gonna stick to that rule, so let's try to finish this video over here as quick as possible because I want to get at least one game in. I want to get at least one game in for the night. So let's watch this video over here. 6 must-have rules for trading psychology and discipline. Another kind of more simple video I'm expecting. Nothing really about indicators. Nothing really about trading. Setups and so on, kind of what S&B Capital is known for. This is more about trading psychology, trading discipline. I'm expecting this to be a great video to watch to start off the year with. You gotta have ironclad psychology in trading. Can't let losses mess you up and get emotional. And you gotta have the discipline to be patient. People always say patience pays, patience pays. But if you don't have the damn discipline to be patient, then you're not getting paid for shit, right? So you got to be disciplined to be patient. For me, discipline is the key word. That's the key word. I've been telling traders like in the old office that you guys know me from for a long time that what is your word? What is your word? And they always go, oh, patience, oh this, oh that, and then when I explain it to them, look, you need to have discipline first. If you don't have that, you're not gonna have the patience for shit. You're not going to have this for shit, right? Because you just don't have the discipline to follow your own system. Not going to do it. So, expecting this video to be great. Let's watch it together over here, and then we can wrap it up for the night, boys.
You'll lose money trading if you can't control your emotions
Oh,
while trading.
Beautiful. You just started off with a rewind. Rewind.
You'll lose money trading if you can't control your emotions while trading live. In this video, one of our senior traders reveals the 6 must-have rules to help you do just that. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
Nothing is more painful than taking one loss after another, being overtaken by emotion, and then digging yourself into a deeper hole by revenge trading. Soon, you're mired in self-doubt and you're a complete wreck. The elite traders in our firm see losses not as setbacks, but as opportunities to refine their skills. To guide you through this process, let's explore 6 fundamental rules to help you avoid these pitfalls. Rule number 1, emotional control. Recently, a new trader came up to me with a question. They shared a scenario where they got stopped out on a well-executed entry only to see the price move in their favor shortly afterward. Later in the session, they found themselves fighting the urge to trade outside their rules in order to make up for that missed trade. They asked what they could do in a situation like this. My advice, never trade if you're riddled with emotions. Take a minimum of a 10-minute break. The science behind taking a 10-minute break lies in the concept of cognitive fatigue. You'll know you're fatigued when you start getting emotional in trades. Extended periods of focused attention can lead to mental exhaustion, impairing decision-making, and heightening emotional responses. By stepping away, you allow your mind to reset, reducing stress and regaining clarity. During the break, engage in simple activities like stretching, deep breathing, going on a short walk, or just calling a friend to chat.
I do this all the time, man. Anytime you get tilted, anytime you have a bad trade, don't get emotional. Just get out of your chair, go for a walk, go get some fresh air, talk to a friend. If you have friends, obviously retail trading is such a lonely place that you might not have people to talk to. For that, we have our amazing Discord server where we all day call out trades, we talk to each other, we help each other out. It's a community, right? Create a community if you don't have one. If you don't want to join my Discord, that's fine. Go join some Discord. Don't pay for it. I don't advise you ever pay for any trading Discords ever. That's a waste of money. Go join some sort of a Discord or create your own. Create some sort of a community where you can talk to each other with, and then anytime you lose, just kind of confer with your friends over there in that circle. Go for a walk. Number one best thing that we do at our workplace is just get up and go for a walk. It saves you a ton of money, and when you go for a walk, come back, you might have a little bit clearer mind a little bit, right? So great suggestion over there. Let's continue listening to the rule number 1.
These actions trigger the brain's relaxation response, reducing cortisol levels associated with stress. Returning to the screen with a refreshed mindset allows for more logical and deliberate trading decisions, fostering a healthier and more sustainable approach. Now, if you're concerned about missing a big opportunity during your break, consider this. In the long run, taking this break will save you more than it will make you. Trading from a place of anger and frustration has not ended well for me, and mistakes made during such times have proven pretty costly. Set your ego aside and take a minimum of a 10-minute break. If you trade through frustration and anger successfully, it will only enforce bad habits. And again, this is something that I had to learn the hard way. Rule 2, a
Simple risk management rule. Okay, what's that?
I've been asked countless
Oh, have a
times
simple
by
risk
new
management
developing
rule. Okay.
traders whether they should use a fixed position size for all trades. The answer is absolutely not. Different stocks exhibit varying levels of volatility. For instance, Tesla is known for its significant price swings, while Ford tends to be less volatile. Trading the same fixed amount of shares in both cases exposes you to proportionately higher volatility in Tesla compared to Ford. Volatility can lead to larger price swings, impacting your risk and potential profit. A fixed share strategy doesn't adapt to the inherent risks associated with each stock. It can make effective risk management challenging, as stocks with higher volatility might require a smaller size to manage risk effectively, while less volatile stocks may allow for larger positions. First, determine the dollar amount you want to risk on the trade. Identify where your stop is, which is typically based on technical analysis, and then just quickly calculate how many shares you can buy to reach that stop loss level. For instance, if you want to risk $2,000 on a trade and you plan to go long and risk to a previous high or low that's 50 cents away, well, in that case, you should buy about 4,000 shares. This is the way we manage risk here at SMB. Before each trade, our risk is defined and there are almost never any surprises. In addition to that, a simple risk management technique is to average out your last 5 winning days and make that your daily stop loss. This way, you're never losing more than you have the ability to make. I really think that this is a great daily stop strategy for new and developing traders to ensure that they're able to stay in the game. Rule number 3, adhering to your strategy consistently. At SMB, we build chart archives and playbooks for specific patterns we like to trade.
Chart archives. You guys listen to this? I just talked about this. I guess this is come from Lance, because Lance works for SMB Capital as like a advisor and so on, right? Wait, am I still on full cam? Oh my god, I've been on full cam this whole time. How long have I been on full cam? All the time, man. Anytime you get tilted for a while, just be choice or get up and number one.
Or logical and deliberate.
I've been on full cam this whole time. Jesus Christ. All right, let's rewind a little bit. Can we just watch the whole video again? Full cam, full screen. Okay, rewind a little bit.
Traders, whether they should use a fixed position size for all trades. The answer is absolutely not. Different stocks exhibit varying levels of volatility.
Oh, it's actually,
for instance,
this is good because I didn't pay attention to this. This is good.
Rule 2, a simple risk management rule. I've been asked countless times by new and developing traders whether they should use a fixed position size for all trades.
Okay.
The answer is absolutely not.
Yeah.
Different stocks exhibit varying levels of volatility.
Right.
For instance, Tesla is known for its significant price swings, while Ford tends to be less volatile. Trading the same fixed amount of shares in both cases exposes you to proportionately higher volatility in Tesla compared to Ford. Volatility can lead to larger price swings, impacting your risk and potential profit. A fixed share strategy doesn't adapt to the inherent risks associated with each stock. It can make effective risk management challenging, as stocks with higher volatility might require a smaller size to manage risk effectively, while less volatile stocks may allow for larger positions. First, determine the dollar amount you want to risk on the trade. Identify where your stop is, which is typically based on technical analysis, and then just quickly calculate how many shares you can buy to reach that stop loss level. For instance, if you want to risk $2,000 on a trade and you plan to go long and risk to a previous high or low that's 50 cents away, well, in that case, you should buy about 4,000 shares. This is the way we manage risk here at SMB. Before each trade, our risk is defined and there are almost never any surprises. In addition to that, a simple risk management technique is to average out your last 5 winning days and make that your daily
Yeah,
stop loss.
that's
This
what
way, you're never losing more
my
than
broker
you have the ability
automatically
to
does
make.
that, so I don't have to worry
I
about
really
it.
think that this is a great daily stop strategy for new and developing traders to ensure that they're able to stay in the game.
Yeah.
Rule number 3, adhering to your strategy consistently. At SMB, we build chart archives and playbooks for specific patterns we like to.
So this is what we were doing today with Pfizer. We were talking about how we were playbooking Pfizer. I was actually playbooking Dollar General here in the background. That's why we were stuck on the single face shot for so long, because I thought I was showing you guys the video, which I was listening on the background while working on my write-up over here, because obviously I don't have much time left on the day here. If I have to go to bed at 10:30, I have to finish this write-up. So I finished the write-up. Very important. We did the Pfizer one with you live. We also put in the Moderna chart in there for ourselves. But yeah, Dollar General write-up is what I was finishing, and he was talking about that exactly right now. It's like, how does SMB Capital do this part of their discipline
to trade, such as breaking news, gap and go, a backside trade, and a second day. We study these patterns, mark up the charts, backtest, use technology to alert us to these patterns or tickers where these patterns could show up. Then we wait patiently. Something we often see new and failing traders do is invent trades on the fly. This is a concept Carlton, our risk manager, came up with during a trader review meeting. One trainee took a playbook trade, mismanaged it, and was upset. Shortly after, out of frustration, this trader started chasing every pop purely out of FOMO.
No.
Carlton simply asked him, "What trade is that?" There was no answer. It wasn't part of his playbook. It wasn't a play from his playbook or chart archive. It was a trade that was invented on the fly. Sticking to your patterns is crucial. These are strategies you've dissected and understood. Your tried and true methods for navigating the market's twists and turns. Deviating from them introduces unnecessary risk. Before executing a trade,
Very well
ask
put,
yourself,
very well
what
put.
is this setup? If you don't know, save yourself some money and skip it.
Yeah.
This leads us to our next rule, patience and discipline. A question I get pretty often is, how many trades do you take a day on average? I have to be honest, I hate this question. If I see my setup appear 5 times in a day, I'll take 5 trades. If I don't see anything setting up for my playbook, then there are no trades for me to take. Day trading is not about meeting some trade quota. It's unique in that you don't need to take a trade every day, especially if there is no setup or edge for you. Never once have I been questioned by my risk manager if I did not take a trade.
Not a
Never
single thing
once
is moving
have I
here,
been
dude.
questioned by my risk manager
Not a single
if
thing
I
is
did not
moving
take
here.
a trade during a session or only took a couple of trades in the span of a few days. This emphasis on patience extends beyond waiting for favorable setups.
Yeah.
It's also about waiting for the right market conditions. Markets are dynamic and not every moment is conducive
Someone's
to
beating up the
successful trading.
wall in the
By
background. They just
exercising
lost the
patience,
trade.
I avoid unnecessary risks.
You guys
and
hear that
ensure that
knocks?
each trade is well considered and aligned with my overall strategy. Here's a fun fact for you. Here on the desk, we did a rough estimate in our monthly review meetings, and we found that the best traders evaluate about 4 to 5 trade ideas for every one trade taken. This means for every 5 trade ideas that come across their screens, they're pressing the keys on just one of them. Discipline is the guardian
That's
of
very,
consistency in
I
day
guess, a
trading.
good point.
It involves adhering strictly to predefined rules and not letting emotions dictate decisions. Discipline prevents impulsive actions that can lead to losses.
There you go.
Every trade is a product of careful analysis and the adherence to a set of rules that have proven effective over.
This guy's half his screen is not used. Bro, your screen is already like a 10-inch monitor, and half your screen is not used. This guy's productivity level is like negative 1,000.
Over time. Rule number 5, size down. When confronted with consecutive losing
Yes,
days,
this
the
is
immediate reaction for many
number one
traders
rule.
might be
Helped
to
me a lot
intensify
during my
efforts to
drawdowns.
recoup losses by taking larger positions. However, this approach can be counterproductive as it amplifies
Yes.
the risk of significant drawdowns and erodes confidence.
Yes.
In contrast,
That has done that to
adopting
me.
rules size down after a predetermined number of losing days demonstrates a disciplined and methodical approach to risk management. If you're on a losing streak, size down until you print a few green days and regain your confidence.
Right on.
Traders at all levels lose some of their edge and consistency at times. Here at SMB, many traders have a rule in place. If they lose 2 or 3 days in a row, they will cut their size until they print a few green days and build back their confidence. I know that's not exciting, but it's a necessary part of trading, especially if you want to do this for a living and have a long career. I know some of the best traders on the street that have gone from a 6-figure daily stop loss down to a 4-figure stop during times when the market is slow or when they are taking on more heat than usual. This practice is not admission of failure, but rather a strategic maneuver to preserve mental capital. It emphasizes the understanding that the market dynamics fluctuate and periods of reduced edge or heightened volatility may warrant a more conservative approach. And lastly, we'll talk about dealing with losses. Losses are an inherent part of trading, and how traders handle them often distinguishes the successful from the struggling. It's all too tempting, especially after a bad day, to simply step away from the screens and try to forget about the loss. However, the path to improvement and sustained success lies in confronting these losses head on and extracting valuable lessons from them. Real traders, those committed to growth and continual improvement, approach losses as opportunities for learning and refinement. Instead of shying away from the discomfort of a losing trade, they embrace it as a chance to analyze their decisions, strategies, and overall approach. The first step is to conduct a thorough post-mortem analysis of your losing trades. This involves asking tough questions like, what went wrong? Were there signs or indicators that I overlooked?
And that takes discipline too, you know? Like, there's been days where I had losing days and I was like, nah, fuck this. I'm not going to review my trades. Fuck this. I already know what I did wrong. I'm not going to bother with it. And then I repeat the same mistake. But then when I actually, review my mistakes, kind of imprint it into my head, it stays in my head a little bit longer. I tend to not repeat those mistakes again. The same kind of way where if you write down the trades that you missed and wanted to take, like we did today on DG and Pfizer, that will help you stay in your mind a little bit longer. Instead of just being like, oh, look, that trade was there, we missed it. Ah, okay, when I see it again, I'll take it. No, write it down, note it down, and when you do see it, you pull up that trade, be like, oh, this looks like that trade. You have it written down, you pull it up, you look at it. Now you look for the trade. Now you have the confidence. Now you have the extra edge
Successful day
that
trading
other trader
extends
doesn't.
beyond technical skills. It hinges on discipline, resilience, and continuous improvement.
Yes, sir.
The 6 rules discuss form the bedrock of a prosperous trading journey. Remember, losses are opportunities for growth, not setbacks. Incorporate these rules into your routine to safeguard your capital and foster the patience and discipline necessary for navigating the markets. Lastly, all traders need to understand that success isn't avoiding losses, but learning from them. Embrace challenges, stay disciplined, and let each trade contribute to your evolution as a trader.
So you're an active trader.
Let each trade add and compound to your evolution as a trader, and you keep on growing to the goals that you have set yourself for and achieve more than that. May 2024 be our year, and we all achieve everything we aim for. Ladies and gentlemen, thank you for joining me for the past 2 hours. It's been a wonderful stream. It's been great being back. It's been great being live again. And let me tell you, I'm on a mission this year. And you're going to see a lot of things happen this year. So stay tuned. We're going to have a lot of fun. And things are just getting started. 2024. See you guys tomorrow. Same time, same place. You know what to do. Have a good night, ladies and gentlemen. Have an even better trading session tomorrow. Peace.